everybody. Welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As always, keep in mind that there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard with some of the features that are built into the order window on our web trader and app that really make the risk management side of things quite a bit easier. And at the same time, keep in mind that what we're going over is not meant to be taken as financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which allows you to trade on both MT4 and MT5 accounts from the same location. And also what you'll see is our mobile app does the same and has the same tools that we're about to use in the web trader in our mobile app. So whether you want to use the signals or some of the fundamental analysis tools, etc., all of those tools are available in both locations. So if we log in the upper right hand corner here, we'll find ourselves in the web trader platform. Now, before we get into the technical analysis looks at some of the different charts and at some of the signals, we should talk a little bit about the fundamentals and what's happening currently. Obviously, a big factor in what's been happening lately has been the Trump administration, which seems to be moving at a lightning pace with all kinds of different ideas and directives, and some of the latest news. If you've not been paying attention, tariffs threatened on Mexico and also on Canada that now have been at least postponed for a month, as both Mexico and Canada have agreed to work on some of the terms that Trump was demanding, that his administration were demanding. And so what caused a huge sell-off in the equities on the different major indices around the world and stock markets now has resulted today and leading up to today in kind of a rebound, as people are realizing, I think investors are realizing around the world, that the techniques being used by Trump, while maybe aggressive, are just a negotiating tactic, not meant to really end up with the initial threat that's there in the first place. And so when tariffs are threatened and deadlines are given, it seems that it ends up in negotiations. And after all, it's a president that wrote a book called The Art of the Deal. And he's a businessman at heart. And it seems that's the way he's approaching foreign policy, to work out deals and trade agreements with each country to try and make things in his eye fair on both sides. And maybe that's debatable, but at least in his eyes, fair on both sides. Now, that's kind of the sentiment today, is nervousness, because the feel is we don't know what might be around the next corner. The latest surprise was Trump announcing that he thinks the United States should take control of the Gaza Strip in the Middle East, and even I guess in his words, own it and control it. I think his intention is I think good, to try and make peace in the Middle East, to build up the Gaza Strip into something nice. I think he called it to make it a place of investment, and the Riviera of the Middle East, I think he called it. That's his vision, to build it up, I don't know, with hotels and businesses and restaurants, and to make it a nice place rather than a bombed out locale. Now, who knows? There's a lot of pushback to that. How are you going to move 1.5 million or 2 million people, and will they really want to move? Who will take them? A lot of unknowns, but this is the big idea that he and his administration have kind of come up with most recently. So full of big ideas. We'll see what comes of some of them. But the markets are reacting to a lot of these things, and right now the markets seem to be calming down a bit about the tariff threats. Even China said they're willing to talk with Trump and work some things out, and both sides would like to avoid a tit for tat tariff war back and forth. And so I think nerves have calmed quite a bit. And that's kind of the situation we find ourselves fundamentally right now in terms of the big news out of the US. Now, there have been some economic announcements out of European Union, UK, US, other places. I don't think any great surprises one way or the other. Some mixed data that came in a little better than expected, some that came in a little worse than expected. Not really the major cause of movement right now in the markets. And so I can show you real quick some examples of what's happening. So if we look at the US 500, what we're going to see is some bullish movement that's occurring, really as we speak. These are 1 hour candles, and we see the up today. Okay, here's a resistance level that I drew a while back. Okay, this was the big sell-off with the tariff threats. This was the initial recovery, sideways movement, and now a recovery back into this zone. And maybe I pulled this line up into this zone where this drop-off came, and then this was the gap down with further dropping. Now we've filled that gap here. Technically speaking, it's a strategy to trade to fill the gap. It's done that. This was the gap down from the weekend from Friday's close to this week's open. We see the gap being filled, pushed back down, hit the top of the gap, pushed back down. Only now we just broke in to the top of that gap, above the gap, I should say, and out of the gap completely. So now it looks like the next resistance level could be up here, which is towards the all-time highs. Okay, it's almost like the tariff threats never happened. Okay, so it looks like if you're bullish on this movement, and again, I say proceed with caution because we don't know what might come out of the Trump administration next, whether it's in the next hour or the next day or the next week. But right now, we've technically speaking broken not just to the top of this gap, but out of it. And usually that acts as support now. As you break out of the gap, this is a technical support level. And we could lower this down just a bit and say this is the technical support level now. Here's support and support, which was resistance, resistance, and now we're above that. So it could be clear sailing if nothing disrupts it, right? If nothing gets in the way, this looks like a strong uptrend. Okay, so if you were going to buy on this uptrend, and let me put the chart back up and just click buy. So if I'm buying on this uptrend, I probably want my stop loss back below the support level. So if I'm buying, I'm saying stop loss down here, like 60, 55, something like that would get my stop loss, and let me draw another line, get my stop loss down below this support level and back into the gap. Okay, if it enters the gap, it might fill the gap all the way back down. That means there must have been something that shook the markets again if it re-enters this gap. So, and breaks the support level. So 60.52, 60.53, something like that is back into that gap. Okay, so 60.53, let's say. All right, take profit up here before the all-time high, let's say. Don't need to break the all-time highs, just get near it. So let's say 61.35 up here. So 61.35 is right about there. Okay, take profit. So take profit, 61.35, and stop loss 60.53. Okay, so potential profit more than double what I'm risking. Okay, now I can adjust the trade size. Now that I have the technical analysis set up with support and resistance levels determining my move, now I can say, okay, how much am I willing to risk? Maybe I don't want to risk this much. I want this setup. I want the take profit here. I want the stop loss below the back into the gap, all of that. I'm in the direction of the breakthrough and the trend and the current momentum. So now I just need to adjust my trade size to be the amount of risk that I'm willing to take. So 0.25 lot size. Now I'm risking less than 1% of my balance. Okay, 1% would be about 570. So risking a little less than 1% or about 1% to make better than double that, 1,500, 2.5%, 3% going after. So then I'm all set. Okay, I make my move. This was largely a technical move, okay? Why? It broke through the resistance level that was drawn here, okay? After being tested once, twice, 3 times, here it went above all of that. Broke out of that gap. If you were looking earlier in the week, you could have traded this gap back up. It worked nicely. Several times it worked nicely. Now we're above it. Okay, so that's a great technical move for a breakthrough. My only caution on this move is we're not in normal times right now. Okay, things are unpredictable right now. So we have a measured risk. Potential for a surge back up is there. We see it surging now. We'll see what happens. Okay, if Trump all of a sudden says, hey, I'm slapping 25% tariffs on China, this is going to come down and lose in my mind, right? He could say that in 5 minutes. So measure your risk. Okay, I don't think he's going to say that. He wants to talk to China. He wants his representatives to talk to theirs and work out a deal. And the 10% threat is what he already made, and that was part of this sell-off. He threatened 25% on Canada, 25% on Mexico, and 10% on China. And so down went all of this movement. Worked things out with Canada and Mexico, at least set up some timetable for negotiations with China, and up went the movement back up. Okay, so all this dropping caused by fear of tariff threats, perhaps it comes all the way back up now towards this take profit on this move. If not, small risk, less than 1% of the balance here in my demonstration account. You obviously can risk less than that or more than that. You adjust the trade size in the order window to see the amount you want to risk. Okay. Now, we can look at, there's a signal out of Trading Central on the US 500. It's a buy signal and it already hit the take profit. So if you align these signals from Trading Central with what's happening fundamentally, okay, and we knew earlier this morning that things had calmed down about the tariff threats, okay? So you easily could have been trading on this signal 5, 6, 7, 8, 9, 10 hours ago, okay? So this buy signal already came up to the first take profit suggestion. It's not to the second one yet. Maybe it does reach the second one, maybe it doesn't. You see it's hesitating. Why is it hesitating? It reached maybe a smaller resistance level over here somewhere that Trading Central saw, okay? These take profits are at various resistance levels, maybe looking at smaller candles than we were looking at when we see the main resistance up here on the 1 hour candles, okay? But it tells you the market has already reached the key level. In this case, the first suggested take profit level, just at the beginning of the take profit zone that Trading Central was recommending. But without even looking, we're in the direction with our own technical analysis that we thought maybe this could rise, okay? Where else can we go? How about gold? When there's uncertainty on the market, safe havens are attractive, okay? Even though there's some optimism going on right now, there's been a lot of fear about tariff threats and everything else, and gold went to new highs. The current signal out of Trading Central is to buy on gold, not a surprise, and it already hit the take profit. So when you know there's a lot of fear and there's a reason to buy safe havens like gold, and then you see the signal breaking down the technical reason to go maybe with gold as a buy, when those two things line up, then it makes sense maybe to follow that signal, okay? I never follow the pathway of following signals blindly. I'll use Trading Central support and resistance levels and their recommended directionality, but then I'll weigh that against what's the current and most recent fundamental news. And does it agree and align with that signal? And if it does, then I'll take advantage of the signal. And if they contradict each other, then I will avoid that signal. I won't follow that signal. So you can qualify which signals you'd want to follow. This already hit into the take profit zone and pulled back a bit. It doesn't surprise me. Gold's been bullish this week and today. You'll see the same technical climbing as other safe havens as well. Okay. The US dollar had been very strong. It weakened a bit today as the fear kind of calmed down. We see gold maybe trying to pull back down. This might be a time, since we see the stock market now rising back up with dropping fear for the time being, this could be a time to short gold because it already hit the take profit zone and started to pull back even below it. Okay, and the fundamental reasoning right now is if fear is down now, the volatility index is actually down, maybe there's reason for gold to pull back right now. Okay, and we could go about that as we look at larger candles on gold, 1 week candles. You see it's at a all-time high, and I can get rid of some of these lines. Starts to look cluttered when we look at one week candles with all the lines I drew on the smaller movements. But what we see here is gold is obviously on the 1 week candles. We see it's on an all-time high. Okay, it's never been higher than what it hit today in just the past few hours. So maybe you think it's time for a short-term pullback, maybe not. If we look at, say, 30-minute candles, we see a little bit of hesitation, a pullback. Maybe it pulls back to a short type move. You know, if you wanted to trade, say, for a couple days on a pullback, without the risk if it goes flying up, you could lose a lot if you try and keep moving your stop loss too high, if, say, you want to short gold right now. So what you could do is use something like AvaProtect, okay? And I'm not saying you should short gold right now. There's a lot of upward momentum on it, but let's assume because things have kind of calmed down a little bit now and the stock market we saw is rushing up, at least for the time being, maybe you think between now and tomorrow or the next day that gold might pull off these all-time highs and pull back down some. So, but you know there's a lot of volatility and it's risky. So maybe you use AvaProtect. You say, okay, listen, I'll risk 1% with a protected move. So if I do one full lot, the protection for 1 day costs me $1,300. That's more like 2.5% of my balance. I don't want that trade size then. Maybe I do 0.25. Okay, that's cost me $345. Maybe I can do 2 days protection. 2 days protection, only $453. It's under 1% of my balance. Maybe I go a little larger, 0.3. Okay, that's under 1%, 0.35. It's over my 1% mark. And again, you could risk whatever percent you want, just showing you the process here. Okay, so 0.31, that's about 1% risk on my account, a little less, okay? Now, where might I think this could pull back to? Let's look at 2-hour candles. Let's find a support level that I think maybe it could pull back to if things calm down. What if it pulls back to, say, 28.47? This was resistance, and it broke above. So if it's going to pull back, maybe it pulls back to here, 28.47. Okay, my protection costs me $562. If I put my take profit at 28.47, what would I make? I'd make $845. Not attractive enough to me. What if it's a larger pullback, say to this support level, 28.31? After all, I'm giving it 2 days. Okay, it starts to look better. 1,346, it only cost me $562. So if I'm right 1 out of 3 tries, I'm about breaking even. If I'm right better than that, I make a profit. Okay, I don't even have to be 50-50 with these types of moves, and I'd make a nice profit. And I can be patient because I don't even have to set a stop loss for 2 days. The protection pays back any losses during the protected time period if it goes the wrong way. And actually, since I have 2 days, I think I'm going to go to a support level like this one. That was this week. It was here just this week. If I go to, let's say, 4-hour candles or 1-day candles, this starts to look realistic. This was this week with the fear of the tariffs. So if the fear of the tariffs have subsided some, maybe it can come back down to a support level more like this, which is around 28.10. So since I'm paying for 2 days protection, I might as well give myself a chance for this maybe to pull back to something like 28.10. Now I'm looking at better than 3-to-1, almost 4-to-1 ratio. If I'm right even 33% of the time, I still profit. 1 out of 3 now I'm profiting still. Looks okay. So maybe I make a move like that. I've risk managed my trade. I've used my technical analysis to see that I'm at an all-time high and to see that there are nice support levels not too far down. Here we saw resistance, 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 and then when it came up, it became support right here. So I'm taking profit without having to break that support level right here at 28.10. Okay, just above that support level, which is right here where it's support, 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 where it broke through just a couple days ago and found support. And then it came up to here. So if this pulls back, could easily make it here without having to break that support level, and I make 3-4 times what the protection cost. Okay, so it's nice to take shots like this, even if it's against the larger trend sometimes, because maybe you think you found a spot where a technical pullback could occur. Because eventually there's profit taking, right? People don't just hold on to gold forever. Eventually there are profit takers. We see that here, right? We see that in the past, profit takers, where for an entire day or two it pulls back. If you think this is the spot because things are calming down with this whole tariff threat, maybe this is the spot, okay? So the fact that there was a buy signal didn't change my mind on this because it actually already reached the take profit. It hit the take profit zone and started to reverse. And the fundamentals maybe are on the side of the reversal now too. Okay, the opposite of the US 500 example where we thought it could continue because the fundamentals are on the side to continue maybe in the upward direction. Okay, so you can see I can start to use fundamentals along with your technical analysis and the technical signals to try and find agreement in the direction that you're trading. And that's how it becomes a strategy and not just a tool. Using a technical signal, like we've looked at a couple of them, it's one tool. But a strategy is something more, where you take that tool and combine it with another tool, like the latest headlines, the latest economic announcements, and you put those together to then have a strategy. Okay? All right, any questions, comments? I'll pause for a moment. Okay, great. Maybe we look at a currency pairing or two. Okay, the Euro USD. No surprise in my mind that as the fears about tariffs kicked in, you see the USD strengthen as a safe haven currency, which many times it does when there's a lot of fear, and down goes the Euro against the USD. And then as there were deals kind of put together with the tariff threats, and the tariff threats kind of went away, at least for the next 30 or so days, USD weakened and Euro climbed back up. Very predictable, okay? We see the resistance level here, okay? Resistance, resistance, resistance. When it broke through this price level, it became support here. And when it broke back below, it became resistance again. Okay, important price level, technically speaking. And we see again today, it hits this resistance level and pulls back down. Now, is it going to pull all the way back down again? Is that fear here again? The fear that caused this drop were tariff threats. There are no new tariff threats right this second, unless it's happened since the last headline I looked at. Okay, so this pullback maybe is an opportunity if you think that this might go up and test this resistance level again. Remember, the US 500, some of the equities have broken through the resistance and continued up towards their all-time highs already today. Maybe this is a temporary pullback. Maybe it pulls back more completely. We don't know for sure. But if we want to look at the technical signal from Trading Central could give you an idea of what you might want to do. It's a buy signal. Has not reached the take profit zone. Okay, this is a more opportunistic entry point than the other signals because this one did not yet reach the take profit zone. Now, if you think the fears that caused the USD to pull the euro down have gone away, then maybe this technical signal makes sense from a fundamental perspective as well. Okay, if you were going to buy on this, your stop loss would be below the pivot line if you're going with the signal from Trading Central. So the pivot line is a support level. If it breaks below there, it establishes a technical downtrend. And they say then don't buy. That's where you would give up on the buy signal. That's what they tell you here. As long as it's above that pivot line, it's a buy scenario. If it drops below the pivot, they tell you here, which is this line, then they say you look to sell because they think it would continue to drop further if it breaks below this price here. Okay, so if you are going to buy with the current upward momentum that was happening today, then your stop loss maybe should be below $1.395, this pivot level. Okay, if we look at this on smaller candles, we can get an idea. Does it look like this will go back up? It really looks like it could because it tested once, twice, 3 times, 4 times. It hasn't broken below here yet in the past few hours. We'll see. It's not much risk to get your stop loss below here. What take profit could you go for? We need a larger candle set to see that. If it does break above this resistance, then we could see a further climb. Here's the resistance level. The next major resistance level after that is up here. Okay, resistance, resistance. And this was before the big sell-off with the tariff threats. So if the tariff threats have subsided in your mind, you could go with this buy signal and not just up to this resistance level, but to the next one here, technically speaking. Okay, so 105.26. So if I'm going to buy on this with the signal, if I trust it based on my fundamental analysis view, and yours could be different than mine, then I might go for a run up to 105.26, this area up here. So take profit 105.20, okay, just below that resistance up there. Stop loss below the pivot, which wasn't that far down. It was just below this area down here, okay? We could go 103.96 and be below a nice support level on the smaller candles. Here's the support here on the smaller candles, okay? If this is truly an uptrend, excuse me, it probably shouldn't come down and break back below what used to be resistance, 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 and then once it went above, it became support, support, and up it went. So if this comes down, breaks below here, that establishes a downtrend, and then I'd probably get out on my buy, as this is more of a short-term move with the current fundamental situation. All right, and then we can look at this. If we go to smaller candles, 15-minute candles, we see our support level here. Okay, this is where it broke through today and found support, and up it went. Okay, so trying to make 16,000, risking 2760. We could do Ava Protect like we did on the gold move if we wanted, okay? Or you can go with a stop loss. If I'm doing a stop loss, I'm probably taking a smaller trade so I can risk the amount I'm comfortable risking. And now I'm getting closer to, you know, the amount that would be around 1% of the balance in this account to risk the amount that makes sense for me. Okay, so that's less than 1% of my balance going after 3,200. If I think that in the next days this will go up, but that because of the volatility, it could first spike down before going up, which easily could happen because of what's going on. The latest headline from Trump could just shake this down before it goes up, if indeed it does go up. If that's your fear, if you're kind of certain in the coming days it'll go up, but that in the short term it could spike down and hit your stop loss, then rather than a stop loss right now, you could use AvaProtect. Okay, times like this is a good tool maybe for your strategy because there's such volatility. And if I protect this for a couple days, okay, so it costs more than 1% with that same trade size, but now I can be more patient. So maybe I just go with a smaller trade. Okay, 1.5, 1.7, 1.6. Okay, so that's about 1% risk less, okay, less than 1% risk on my balance. And I could make over, what, 3%? Okay, over 3% in one move, risking a third of that, going after 1,700 plus profit, risking less than 1% on the account. Again, if I'm right, 1 out of 3 times, I'm still profiting on a move like this. Okay, so I'm happy to pay for protection when I'm unsure about the short-term move and maybe feel a little more comfortable about the longer-term move, because now I don't have to worry about it hitting my stop loss with the volatility. And if I'm right on my kind of medium range time frame view, then I can have a nice profit. Now, when you're using AvaProtect, okay, it shows you that you have a trade with AvaProtect. You see here, it shows you AvaProtect on whatever trades you have open with it, and I can come over and take a look and see that I have 45 hours and 27 minutes left on that protection. Okay, it will update you, and as you get near the end of your protection, you could then add a stop loss if you want, if it's appropriate, or maybe you've already closed the trade. Okay, if it's losing and way in the negative, when the protection ends, you get paid the entire negative floating to your account and the trade can keep running. If you get stopped out during the protected time period, all the negatives gets added back that you lost on the trade. Okay, and you can re-enter from a better price then. And then maybe it's even easier to make a profit. So very nice tool, this AvaProtect, to go along with the signals and understanding the current fundamental news. You can have a really nice strategy set up like we're looking at here. Okay. This is probably a good place to stop for the evening. Any questions, comments before we end the session? Rogelio, I see you had a question from a little while back. Sorry, I missed it. You're asking, how do you determine a valid support? You know, the larger the candles are that I'm looking at, the more I tend to trust the support and resistance level. Okay, so if I'm looking at 5-minute candles, and it might look like, wow, it's a nice support level, it's hit that price 8 times or 5 times and held, that means less to me than if it's 1-day candles. And I've seen over the course of weeks or months that it's hit a certain price level and held. I might put more value on a support level that's been there for days and weeks compared to a support level that just formed a couple hours ago. Okay, so it's all relative to what candles are you looking at, 1 minute, 5 minute, 1 hour, 4 hour, 1 day, 1 week, etc. How many contacts at that price level have there been that held before it broke through maybe? How many times has it broken through and then reestablished at the same price level? All of those things help you determine how much you value that support level or resistance level. Okay, if you're scalping short moves for 5-minute trades, okay, the support level on a 5-minute candle chart might mean a lot to you. If you're trading for longer term moves, then the price levels you see on a 5-minute chart don't really mean much to you. If you'd rather be looking at 4-hour candles, 1-day candles, if you're looking to trade through the week and not get in and out real quick. Okay, very good question. I don't see any other questions popping up, so we'll call it quits here. Good luck with your trading the rest of the day today and the rest of the week, and I'll be back at it next Tuesday. Next Wednesday at the same time as this week's webinar tonight. And tomorrow, I have a fundamental analysis session at 11 a.m. UK time. You're all welcome to come to that as well. And so I used to do my late webinars on Tuesdays, so I mixed up the day for a second there. But this session will be the same next week on Wednesday, and I have a session earlier in the day tomorrow. You're welcome to attend, where we'll focus more heavily on fundamental analysis. All right, everybody, thank you for joining, and good luck with your trading. Bye for now.